Hey, it's Dan Morales, and I wanted to talk about what your payments are during the course of your construction loan. Now, typically with a construction loan, if you're doing what's called a construction permanent loan, you're normally going to have what's called a construction phase, which is the, if you will, period of time in which you have to actually construct your house. That's known as a construction phase, and that's that section of time where the house is being constructed and the builder is taking draws towards the completion of the house. Now, during that period of time, you are going to be making what are called interest-only payments during that construction phase. Now, once the construction phase is completed and the house is done, you normally would have to have what's called a certificate of occupancy, which says that the home, if you will, met the municipality's requirements as far as code and so on. And in addition to that, the builder would have taken the last draw, and we would have had the appraiser do an inspection to verify that the house was completed, if you will, according to the plans and specifications that you told us about. Now, assuming that all those pieces come together, what happens is at that point the loan would convert to your permanent stage. So a construction permanent loan is, construction phase, which is the period of time in which the house is being built, and then of course the permanent phase, which is where you actually repay the loan over the period of time in which you've selected as part of your loan up front. So a construction permanent loan combines the construction loan and your permanent mortgage together in one shot. Now, during that construction phase, your payments are interest only, and they're interest only based on what the builder is drawn towards completion. So usually what happens is, of course, when you start the project, your balance on your construction loan is pretty low. Now, that balance will kind of gradually increase as the builder takes draws towards completion of your home. As your balance on your construction loan increases, so does the interest payment that you're required to make as part of your construction loan. Generally speaking, your interest payment's going to start pretty low, based on the fact that the house is just getting started and not much of that construction budget has been drawn, at least initially up front. And then usually what happens is as that builder takes draws towards completion, your interest payment is going to step up as your balance grows as part of the construction loan as well too. So it's important to remember that you do not pay interest on the entire loan balance once you close on your construction loan. You pay interest-only payments based on the amount that has been drawn of your construction loan towards completion. So if you have a large down payment that goes into your construction loan right from the get-go, we typically are going to disperse funds to the builder, and we're going to generally disperse your down payment or your funds first to the builder. After all of your funds have been exhausted, at that point the bank will tap into your construction loan to fund the builder, and then of course as that balance rises, so does your interest payments as you go. Now, it's impossible for us to know what the builder is going to draw and when they're going to draw it, so I can't tell you exactly what the amount of your interest payment is going to be right up front. I can just tell you that it's going to be based on the amount that the builder has drawn towards completion. You're only going to pay for what the builder has used, and you're only going to pay for the length of time that it was out there. So in other words, what I mean by that is if, let's say on the first of the month, your construction loan had a balance of $50,000, and then on the 10th of the month, the bank, if you will, funded another $30,000 to the builder. For that first 10 days, if you will, you're going to pay interest only on the $50,000. For the remaining, let's say 20 days of that month, you're going to pay interest only payments based on the $80,000. So you're only paying for the length of time that the money was out for and the actual dollars that were out for that length of time. So you're not paying for, an average balance or something like that. Now, a lot of times credit card companies do, if you will, this kind of fuzzy math in an attempt to, make some extra interest off of you. In our case, it's a simple interest loan. So you're only paying for, the length of time that the money was out there and for the balance that was out during that period of time. So again, during the course of construction, payments are interest only based on what's been drawn towards completion. Now, it's important to remember that during the construction phase of your loan, we do not collect any money for taxes and insurance as part of that. So in other words, there's no escrow account for property taxes or homeowners insurance that are being collected as part of the construction phase of your loan. Now, in some cases, you may be required to have an escrow account for taxes and insurance once the house is completed and you start to make your full principal and interest payment at that point in time. But during the construction phase, there is no funds or no dollars being collected from you towards taxes and insurance. So what that means is any property taxes or any insurance costs that you have during the construction phase of your loan are your expense to pay cash out of pocket, because they are not included as part of the loan amount, and they are not being included as part of the interest only payment that you'll be paying during the construction term of your loan. Okay? Now, once your house is completed, we have that certificate of occupancy that we require, which verifies the property has met the county standards, if you will. And in addition to that, we require the appraiser to do a final inspection to verify that the house has indeed been completed according to the plans and specs that you've told us. Now, at that point in time, you would start to make your full payment of principal and interest, as well as any escrows for taxes and insurance if they are part of the mortgage that you have with us. But you do not make that complete payment until the house is completed. And at that point, you would make that full principal and interest payment with any escrows for taxes and insurance, if applicable, for whatever period of time that you've elected to take your loan for. Okay? During the construction phase, payments are just interest only based on what the builder is drawn towards completion. And then once the permanent phase of your mortgage kicks in, at that point in time, you're going to make a full payment of principal and interest plus any escrows for taxes and insurance if applicable. Now, one of the things to keep in mind is if you do have an escrow account for taxes and insurance, once your house is completed and we have your certificate of occupancy as well as the final inspection from the appraiser, if you do have an escrow account that is either required as part of your loan or one that you've opted to have as part of your mortgage, once the house is done, at that point in time, we are going to fund or require you to fund your escrow account for taxes and insurance. Now, depending on when the house is completed, the amount that you would need to fund in your escrow account can vary at that point in time. We can give you a good estimate of that up front as part of the early part of the process of the construction loan, but you should make sure that you save a little bit of money and you have some money set aside for funding your escrow account once your house is completed. So again, I hope this information is helpful to you. There's some more information on the website. I encourage you to take a look. If you have questions or concerns, or there's something that we didn't talk about or didn't cover for you as part of the construction loan process, I encourage you, please make sure to ask questions. We're here to help. Again, I'm Dan Morales with North Point Bank. Thanks for taking the opportunity to watch this video.